G'day ladies and gentlemen, welcome back to another Bitcoin video. As you guys know, I had a different setup last year, in the middle of last year, but I had to move out of that place because I was renovating. We're moving back soon, we're moving into a new location soon, so the solitary confinement phase of the Wolves of Crypto YouTube channel that a lot of you have referred this as because of this cinder block wall right here is coming to an end. Unfortunately, I did enjoy the solitary confinement phase, it was quite fun. I did also have before, if you remember 2022, early 2022, late 2021, I had a brick wall behind me because I was in the basement. But now we're actually getting back into the new place. It's all renovated, ready to go. So we'll get into that maybe tomorrow, maybe day after. We'll see how it goes. So I should have a new background coming up. So yeah, we'll get ready for that. But other than that, we're jumping straight into the video today. So yeah, let's get into it. So first and foremost, and probably most importantly, a lot of people have pointed this out to my attention. I've been aware of this for a long period of time. In fact, I did a dedicated video on this about 3 weeks ago. The def cross on the weekly chart is of quite a bit of importance to a lot of people right now. So we have a weekly chart def cross between this red line here and this green line, which is the 50 SMA and the 200 SMA, both in the weekly chart. And as you know, we've never seen a def cross before. And in the name itself, in the name def cross, of course, a def cross is a very bearish thing. I am not a big believer in crosses. I don't think crosses actually do too much. And I've looked into this quite extensively in the past. You know, and we use the 3-day chart as an example. I'll show you right now. So on the 3-day chart, we had a golden cross here, which is very bullish, where the green line crossed under the red line, led to an upwards trend. We had a def cross here just before the crash, led to a downwards trend. We had a golden cross. We had an extended upwards trend after that in the months of the past. Obviously, COVID's threw it off schedule, but generally speaking, it was upwards. And we had a def cross over here in May 2022 on the 3-day chart, and it led to downwards price action. Now, here's the thing: if you look at this chart on face value, you could say, okay, well, you could say, well, Wolf, clearly they do something. Clearly, def crosses lead to downwards price action, because look at 2018, for example, Wolf. We had a def cross, we dropped straight away. I would say that it's just it's more of a representation of current trends rather than a trigger to a new trend. If you look at what we were doing before that cross, we were in a strong downwards trend. Of course, these lines are going to move together because the price action determines where the moving averages move. Now, you might say, well, Wolf, isn't it a coincidence that it happened right there at that point in time? I wouldn't say it is, right? Because it's just consolidation coming to an end. You could say that was a def cross that triggered that drop, but at the same time and in the same sentence, you could quite easily say that it was actually a breakdown from a descending triangle formation that caused that drop. So, was it the def cross? Was it the descending triangle formation? At the end of the day, it doesn't really matter. The point is, moving averages are just a reflection of what's already happening in the price. Moving averages don't actually lead to price action. They are a reflection of what's happening in the price action. Now, obviously, a def cross is a reason for people to sell, and hence the price goes down based on def crosses. But you have to remember when looking at something like the weekly chart, right, that people have bigger things to worry about, okay? If you look at how long a def cross would take to play out on a weekly chart, you have to remember, right, this def cross would play out. Right, you'd expect there to be at least maybe 25 candles worth of red price action after that. Within 25 candles, that's 25 weeks. That's half a year. The price moves up and down based on people reacting to events that are occurring. People forget about things very quickly. If we see a def cross, it would matter for a few days, and then people would completely forget about it. You have to remember that, right? So things about weekly chart, and this is why I don't look at weekly chart too much in terms of like indicators, right? Because you can see an RSI breakout in the weekly chart, and yeah, it's a big deal, but within 2 weeks, everyone's forgotten it's even happened, and they're looking at a completely new triangle formation, or looking at a completely new channel formation. They've shifted their attention away from that, right? And so this is why I don't think longer term things like longer term def crosses, and the monthly chart specifically, I don't think they matter awfully a lot. Now, off the bat, as I said before, I don't think def crosses actually matter too much at all to begin with. But even then, extending it to larger time frames, I don't think they matter that much at all. Even looking at the same kind of analysis we did over here, I made the argument here just then that, maybe the triangle actually caused it, not the def cross, and you can make the same argument about the most recent def cross in 2022. We were in descending channel formation. Okay, look at that. That's a bearish formation. We started the bear market. The 4-year cycle said the top was in. Everything was looking bad. We were seeing bearish divergence in the RSI. Was it the def cross that triggered the drop, or was it the fact that we had all of those other things? The def cross is merely a reflection of everything else. So it's more of like a visual tool, right? Doesn't mean it's not bearish. Yes, of course it's bearish. People are still going to react to it, but it's not as big as deal. It's not as big as a deal as people think it is, because there's always other reasons that support that. So yes, the def cross is bearish. Yes, we haven't seen one before. We're going to have to see what happens. But at the end of the day, realistically, at the same time as we're seeing this death cross, Bitcoin is already very overbought on a daily chart. It's already very overbought on the 4-hourly chart. It's already reaching resistance on the monthly chart. So is it the death cross that's going to lead to a correction, or is a correction just due to happen? That's what I mean. Everything's linked together. And again, I do think a correction is due to happen. And this is a very short video for that reason. I think a correction is due to happen. I spoke about this yesterday. We have an ascending wedge formation here on the daily chart. Broke to the downside. If we zoom up closer, now we've got an ascending broadening wedge formation. That's likely to break to the downside as well. I've spoken about this so much. We're in a range still between 21.9k and 25k. I think 25k is a very strong resistance zone. We've seen a 55% move upwards since November without any sort of retracement whatsoever. It seems logical that we see some sort of retracement here. A healthy retracement will be back down to 19.5 to 20k. I'm not saying that's going to happen, but if we lose 22k, I will say that's going to happen. I think it's too early to say at this point. If we lose 22k, 21.9k, it's pretty likely. And that will be a healthy retracement, and that will be more than healthy, because I think the bottom is in, but we do need to see some sort of retracement at this point. So the overarching question I'm extending to you is like, well, if we see a death cross and we start correcting, did we correct because of a death cross, or did we correct because all the TA is bearish? It's not just because of a death cross. The death cross is merely a representation of the other TA. So it's very important to remember that, because it's very easy to get lost in the ultra bullish and ultra bearish arguments. Oh, this has never happened before. Oh, it's going to lead to 5k Bitcoin. Everyone panic and sell. No, it's not that serious, guys. It's just a representation of what's already happening. But yeah, I mean, look, other than that, we do have a monthly chart bullish MACD crossing coming. If we're talking macro scale, the macro scale looks very good. Monthly chart bullish MACD crossing coming maybe 3 or 4 months away from that. Yeah, we're rejecting from resistance in the monthly chart, but we did just break above a green resistance zone as well, and we did just break above, if we look at the RSI, we did just break above a horizontal level that marked the bottom on 2 previous occasions. I'll draw that in right now so you guys can see it. Let me get it up. There is the level right there. So we broke above that as well. So yeah, there's a few things going on that are obviously we're at a very high chance of rejection coming up to the next, this, as I said yesterday's video, February this month is likely going to be a red month. I do believe that. We're seeing very strong resistance after a very large move upwards, but ultimately the macro scale still looks very healthy. And yeah, that's basically it. If we want to really take a look at the macro scale in a light that we've never really taken a look at it before, we can bring up something like the Gaussian channel. I don't really discuss the Gaussian channel too much, but the weekly chart Gaussian channel is quite interesting. And we can try and get a perspective here of what's going to happen on a larger term time frame. What you can see about the weekly chart Gaussian channel is, generally speaking, every time we enter the Gaussian channel, like for example, we entered it from the top side here, every time we enter it, we move through it, okay? We enter from top side, we move through it. We enter from the bottom side, we move through it. That's 2 out of 2. That's 3 for 3 there. That's 4 for 4 over there. The COVID drop doesn't count because it's a black swan event, and then we drop through it here. That's 5 for 5. So out of 5 times we've entered the Gaussian channel from each direction, we've moved through it, which means that if we enter it again, and we're getting very close to entering it, right? What you can notice is that it's at 25k, and 25k, of course, is a range in which there's a conglomerate of resistance. If we enter it properly, which is we're very close to doing it at this point, we might reject before we do it, we might correct before we do it, but if we enter it properly, we're very likely, based on, the previous price history of Bitcoin, we're 100% likely to move through it. And, that's a big range to move through. That's a 10,000, 12,000 USD range to move through. So, I think the macro is very, very strong right now. That's one other thing you can watch there, is the Gaussian channel on the weekly chart. We'll be looking into that quite extensively as the price action kind of progresses. There's so many things to watch, really. Even looking at the death cross, and you can expand on this further, right? I'm going to take this point a little bit further. Yeah, we're seeing a death cross. What we can look at, though, is that we have an 8-year uptrending support line, this yellow line, and we can actually use the 50-week SMA as a indicator to give us an apex for this breakout, right? So we can see that this indicator, this 50-week SMA, is going to be moving downwards at about trajectory, like we're measuring out the trajectory right now. So that should be the rough trajectory of where it's moving downwards, this dashed line here. So that gives us a point in which we're going to be seeing compression between the 50-week and the yellow line, right? And giving us an apex around July, which means we'll move upwards or downwards, upwards above the red line, and hence above all the other indicators, or downwards below the yellow line, and hence below the 8-year support line by July. So, I've said it before, I'll say it again. I think Bitcoin is moving very quickly. I think January was a very sharp move to the upside, perhaps a little bit too sharp. I do think we need to see a healthy correction, and I do think ultimately we will end the year on Bitcoin right? I'm talking end of 2023. We will end the year on Bitcoin in the mid 30K region. That's where I'm looking at for the end of the year. Mid 30K region is my target for the end of the year. And so we're not actually that far away from that zone. And so it does make sense to see a lot of consolidation. This might be a year of extensive consolidation, just like most years after the bear market bottom are. You generally see impulses upwards and then you see consolidation. The impulse upwards is not done yet. As I said, mid 30K region, that's still far away. But, you know, we've got, 9, 10, 11 months to get there. 11 months to get there. So, you know, we've got a lot of time on our hands. There's really no rush. 2023 is always been expected, in my opinion, as I was saying last year, this is expected to be the most boring year on Bitcoin. Last year was full of drops. This year, we're going to see some upwards accumulation, but mostly it's just going to be consolidation and slowly upwards. Next year, end of next year, it's going to start really picking up again. So tomorrow, we're coming back with a new background. We'll come back with some fresh analysis on Bitcoin. And I'm excited for it, guys. So I'll see you there. But please, guys, stick around for a second. I want to show you something that you might be interested in. So we've got the VIP group, and we've spoken about the VIP group before. The VIP group, we trade altcoins sub daily, 100 USD for 3 months. We've got about 100 members in there. You can sign up or check the results in the pinned comment description below. But for the VIP group, we use the Bitget Exchange. And, you know, for the YouTube channel in general, this is the exchange I recommend everyone uses. It's non-KYC. It's got a protection fund where you can get reimbursed in your funds in case an FTX thing happens. So in case the exchange goes down, you can get reimbursed. It's also got 5 times lower fees than Binance, and it's just had no spot fees for about the last 6 months. So there's heaps of stuff in this exchange that you can find useful. You know, again, it's non-KYC, it's a global exchange. I personally use this exchange for about a year. In my opinion, it's probably the best exchange to use as a trader. And you get a 15% discount on fees for signing up using my referral link. So please go ahead and do that. Help yourself and help the channel out. And then, of course, if you want to learn how to trade, become a trader, 10-unit course. You know it by now. The Crypto Academy, developed by myself at Mega Crypto. It's a university-style, you know, kind of format type course where you learn how to trade, you learn TA. And, of course, it's not only crypto related, right? It's compatible to all financial markets. So these are skills that are literally going to last you a lifetime. Technical analysis is not going anywhere. So check that out. You know, website links below in the description in the pinned comment, and throw us an email on the website link here at cryptoacademycourses@gmail.com, and we'll send you a full video kind of outline, a visual outlook of what the course is, so you can make an educated decision. But VIP group, Bitget Exchange, Crypto Academy, get around it, guys. Pinned comment description. Thanks for watching. Hope you enjoyed, and I'll catch you guys tomorrow with the new background. Cheers.